Bismillahirrahmanirrahim. In the previous class, we discussed about procedure of verification that verify assets register, schedule of assets, then physical verification, verify the custody, addition of assets, disposal of asset, transaction approval, verify the cost, verify the internal control, loan on asset, verify disclosure, and verify title deed. After that, verifying depreciation, external verification, capital and revenue verification, and stock valuation certificate. Then after that, we discussed about steps of checking the share capital of a new firm. In that, we discussed about checking of authorized capital, checking of application letter, checking of minutes, and checking of various other things. Today, we are going to discuss the next step in checking the share capital of a new firm. The fifth one, it is checking of cash receipts. Now auditor will verify, will check how much cash is received. Auditor should check the cash received on application. In the previous class, I told you about this, that when company is going to issue shares, they are informing the public through prospectus. Now when the public, they will see the prospectus, they will contact the company. Company will issue, this is company. Company will issue prospectus to the public, this is public, these dots. So when they will see the prospectus, they will give an application for purchasing the shares. Now here is the same situation. Auditors should check the cash received on application, that how much cash is received on the applications. He should compare it with allotments shown on the cash book. Now, after receiving the application, company will decide to allot shares to this shareholder or not. So, if shares are allotted, so what will we do? The auditor, he will compare it with allotments shown on the cash book. There will be proper record of this thing. So in the cash book, we will compare cash book with allotments. Then he should compare the application and allotment book. Then he will compare the application and the allotment book. So in this way, he will make sure that yes, this much amount of cash is received from the shareholders. So one thing, company will inform the shareholder through prospectus. Public will give application letters, applications simply. Then company will allot shares to the shareholders. When shares are allotted to a shareholder, so in allotments, we will compare the allotments with the cash book. We will compare that we allotted 100 shares to Mr. A and he paid, suppose, $50 per share. So the total money received, it will be 5,000. So here we are checking, we are comparing the allotments and the cash book. Then he should compare the application and allotment book. Then at the end he will compare this application and this allotments to make sure, yes, he give application and shares are allotted to this person. Comparison of passbook. Auditor should compare the cash receipts with the cash book. He should also compare the cash book with the bank passbook, because when we receive cash, mostly cash is received through bank. So we are comparing the cash book with the bank passbook. That both are same. If both are same, it is fine. If there is some difference, then it shows that something happens. So comparison of cash book with the passbook. Here he is comparing the cash book with the passbook to make sure that yes, this much money is received. Register of members checking. When company is issuing share, they are writing the names of the shareholder in a register. So now here, register of members checking. We are now going to check the register of members or the register of shareholders. Auditor should verify the posting of entries into the register of members from the application and allotment book. I'm telling you, when shares are allotted to someone, a shareholder, his name will be written in a register. We call it register of members. Now what will we do? Auditor should verify the posting of entries into the register of members. Now he is going to confirm this thing, that his name is there in the register of members or not. From the application and allotment book, he will check the application, he will check the allotment book. Now shares are allotted to someone, suppose Mr. A. So now his name will be there in the register of members. So he will check it, he will make sure, he will confirm this thing. Checking of contract. Auditor should check the company's contract with the vouchers in regard to the fully paid shares. He should also check that facts are disclosed in the prospectus. Now you know what is share? Share is basically a contract. This is what? This share, this piece of paper, this is basically a contract. Contract between company and the shareholder or the public simply. Now auditor should check the company's contract of the company with the voucher in regard to the fully paid shares, and they will check it for those shares which are fully paid. He should also check that facts are disclosed in the prospectus or not. He will also check in the contract and in the prospectus. In the prospectus, prospectus is issued to the public to disclose each and everything about the company. Disclose each and everything about the company to the public. Then they will compare the contract with the prospectus, that each and everything is disclosed properly or not. Then checking of balance. Share ledger balance should also be checked by the auditor that its total agrees with the total amount of the share issued. Checking of balance means there is share ledger balance when shares are issued. So in the ledger we are making an entry. So there will be a balance of share ledger. Should also be checked by the auditor that its total agrees with the total amount of shares issued. Now, this balance will be checked with the number of shares that are issued. Suppose 10,000 shares are issued and the price of one share is 50. So it becomes 5 lakh. Now this means that company will receive $5 lakh. Now this balance will be checked with the share ledger balance. Share ledger balance, that we receive the exact amount or not. That is, suppose company issued 10,000 shares. How many shares? 10,000 shares are issued to the public. What is the face value? At the rate of 50. This is the face value. Now, when we received cash from different shareholders, so we will pass an entry in the books of account. This is books of account. That we received cash debit, capital, stock, credit. So here will be a balance of this. So there will be a balance of this account. Capital, stock. We call it share ledger balance. So we are going to compare this balance and then we will check how many shares are issued. 10,000 shares. The price of one share is how much? It is 50. So it will become how much? 5 lakh. So now we will check this with this, whether the balance is correct or not. So this is checking of balance. Vouching of journal entries. You know about vouching, that what is vouching? Auditor should vouch the entries related to share and also check the postings. He will check all the transactions which are related to issuing shares, and he will also check the postings that the company made exact postings or not. So here vouching means all the transactions which are related to the issue of shares, issuing shares, and their posting, and also check the posting. Posting here means first we are making entry in journal, then from journal it is going into ledger. So we are checking all the entries in the journal which are related to what? Issue of shares, issuing shares. And then their posting, the posting of journal entries into the ledger. Receipt on call checking. Auditors should check the amount received on calls with a receipt book, cash book. and bank passbook. Now, first of all, what is call? Suppose the company issued 10,000 shares. Price of one share, it is $50. But company is not receiving this $50 in lump sum. What is company saying? That make $10 payment initially, then $20 in the second installment, then $20 in the third installment. So this is called first call. This is called the second call. This is called the third call. First call, second call, and the third call. So they will check this thing with these calls. This is called call. Receipts on call checking. Auditors should check the amount received on calls with the receipt book, with the cash book, and with bank passbook. They will check this thing, the call receipts on call, with the receipt book, with cash book, and with bank passbook, to check that exact amount of cash is received on calls. Suppose initially we call $10. So 10,000 total number of shares issued, and $10 is the first call. So 1, 2, 3, 4, 5. So this means $1 lakh is received on the first call. Now we will check. We will enter this in cash book, and this money will be deposited into the bank. So bank will also make an entry in the bank book. So at the end, auditor is going to check these calls, money received on calls, with the cash book and with the passbook. Checking of paid commission. Now, when company is issuing shares, they are also paying commission to underwriters. If commission is paid, then auditor should also check that it is paid according to the rules and legal requirement. Now, if on issuing shares, company is paying commission, so the auditor will check that whether the commission is issued according to the rules and legal requirements of the company or not. So company will also check this thing.